Hello traders, Gary Wagner here for Trending Markets, about 12:15 in Honolulu, 5:15 in New York. It is Thursday, 12th day of November, and we do have the Dow Jones Industrial Average, along with the almost entire commodity complex, trading under pressure, trading lower on the day. Dow Jones Industrial Average off about 1.5%, 1.44 to be exact, 17,448.07. Puts our markets in a precarious position in that we have broken below a 200-day moving average on the Standard & Poor's 500. We'll look at that in a second. First chart I do want to look at now, this is a shorter-term 480-minute chart. Now realize out of the last 4 trading days, 3 of them have been lower. And as we look at this channel, my question that I really pose to our traders here as well as myself is whether or not, if this market continues to trade lower, if it will find any kind of support and bounce back off the bottom of this channel. That's something we'll have to pay close attention to. But for right now, we have pressure, and we have significant pressure. I draw your attention to this chart. This is our daily chart, standard candlestick format, in which we've got a 200-day and a 50-day moving average. Now, the 200-day is what the large institutional investors watch. That is this blue line right here. We talked about the fact that it had shown us in the past, at least up until today, a tremendous area to find support. You can see that here, you can see that here. But we barreled through this market as we traded lower in the S&P, this of course being the E-mini. To give you an idea, down about 1.38%, very, very close to what we saw in the Dow Jones Industrial, down a little bit less, 2040.50 in terms of the actual price on that. That's off of a low of 39.50. So we closed within 1 point off of the low. And when we look at the high, 77, you can see we've had a pretty tremendous range throughout the entire day. Another way we can look at it is when we look at our MACD, moving average convergence divergence, and we absolutely have seen these two cross. We've also, when we look at the short-term linear regression, which is our bullish channel lines here, we can see that we have absolutely now broken below this channel line. So the fact that we've broken below the channel line here, we've broken below the 200-day moving average, and we have our moving average crossing at this point, to me tells us that we could in fact be looking at lower pricing. Now, you know, I had been looking for a point or a position to actually enter this market from the long side. I have held back. I came close to pulling the trigger, but I didn't feel as though we had confirmation, and I didn't believe that the technical evidence was solid enough to act upon that, and that was certainly the proper move. There are times in the market where I believe the best move is no move at all, meaning to be sidelined or flat on the market. I believe this to be one of those occasions, because my sense is that there's a lot more money to be made on the upside than the downside. Of course, you'll make that money quicker if you catch these moves down, but I'm a long player in the Standard & Poor's and U.S. equities as a whole. I'm absolutely bullish on that. Now, I'm bullish on that, but certainly not bullish on crude oil. Crude oil plummeting today, off 3% plus on the day, down another $1.33, but below $42 per barrel. Look at this dramatic move that we saw as this market really plunged through and has broken through a couple of series of lows over the last couple of days right in here. The other market that we've been looking at has been the dollar. And the expectation, of course, was that we should see some upside action in the dollar based upon the fact that there's a high probability, well, that was up until yesterday at least, that we'd see some sort of rate hikes. But in fact, we've seen pressure over the last couple of days as we got top heavy right before this market hit 100. This is 100. This is a weekly chart in which we have basically one fib retracement in there, and that fib retracement simply takes us from the beginning of this rally in July up to 100. 38% retracement, that's been absolute support at around 92. And then 95.68 that comes in really mid-zone. There's not a lot of information you can glean from there, but you certainly can see something at the top. We came just shy of the top, and now it appears as though we have a little bit of retracement. I believe that real support currently in the dollar runs right here at approximately 98 on the dollar index. You know, we talked about gold, and gold, of course, has been in an absolute virtual meltdown in the market. But interestingly enough, as I said on the gold report that I did earlier today, we could absolutely have some sort of double bottom here. This is a simple bar chart, weekly bar chart. And as you know from viewing the gold forecast, that we could in fact see a double bottom, but I can say this: we are absolutely at a critical area. We haven't broken through that, unlike the equities, which is absolutely broken through the 200-day moving average. This has been Gary Wagner, wishing you as always good trading. We'll talk to you tomorrow for the weekly wrap-up and review in trending markets. Bye-bye.